How often are you supposed to be checking your charts? I know that many of you get stuck with continuously checking your charts every few minutes and sometimes when the things get quite extreme. So in this video, I will give you a solution to this problem. So without further ado, let's get straight in the video. And if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel so you don't miss out on all this free education, and I will see you in the video. Okay, so what I will be speaking about in this video is how often you are actually supposed to be checking charts. So first, I will speak about this, and then I will also give you a full update on the situation that we currently have on USD CAD, because it's an extremely interesting pair to follow for a potential trading opportunity. So I will speak also about it. So first, let's speak about how often you're actually supposed to be checking charts, and then I will give you the update on USD CAD with a potential trading opportunity. Let's start by this. Now, obviously, the amount of time that you need to spend behind charts will change if you are a swing trader or if you are a day trader. Now, if you are a swing trader, the best time frames for the direction of the market are the monthly, weekly, and daily. So you don't have to check the charts that much from a directional perspective, because as we said, monthly, weekly, and daily are for direction, obviously combined with the order flow. So what the biggest banks and institutions are doing. But since monthly, weekly, and daily are the time frames on which you take the direction, the lowest one of these three is the daily. So from a directional perspective, you only have to check the charts every day. So once a day, which I suggest being just before the Asian session. That is when I scan my swing trading watch list to see which pairs I have to put on watch list for the next day. And that is obviously also when I tell students which pairs are near to satisfying an opportunity where to take the trade with entry stops and take profits. So monthly, weekly, and daily for the direction, and 4 hour for entry. Now the 4 hour, obviously, that is the time frame that forces you to actually check the charts. So the way in which you have to monitor price when you are swing trading is only once a day from a directional perspective, and from an entry perspective, you only have to check the charts every 4 hours. That is at least what you need to do with our strategy. So only for about 3 minutes every 4 hours. So you can easily do anything else in your free time, because you only have to check the charts for 3 minutes every 4 hours, because you already know which pairs are near to satisfying the opportunities. For example, here we already know the pairs that are near to satisfying the opportunity for today, and we only have to check those pairs every 4 hours for more or less 3 minutes, even less. So this is how often you're actually supposed to approach the chart. So you need to know your strategy. Otherwise, you will just be all day in front of the charts, and you will probably start seeing opportunities that are not even there. So swing trading, this is what I suggest, at least that is what works with our strategies. I don't know what your strategy is. And day trading, obviously, you will have to be behind the charts more, right? That is for sure. For us, with our day trading strategy, we take the direction on the 1 hour and the execution is on 50 minutes. So basically, you only trade the strategy when you really have time, okay? When you want to be behind the charts. Our strategy works in all sessions, so you can trade it whenever you have free time from a day trading perspective. And you basically have to scan the watch list every hour. And for the execution, you just have to check the charts every 15 minutes. So it's not super stressful. It's actually pretty straightforward. You don't really have to be glued at the charts. But obviously, when you're day trading, there is more frequency, right? So you have to check the charts more frequently. But the good thing is that you don't need to do it all day. You can just trade it whenever you have free time. So obviously, with day trading, you will need to be behind the charts more often. But swing trading is compatible with any other kind of activity, because basically, at least if you do it in this way, so taking the direction on monthly, weekly, and daily, execution on 4 hours, and checking the order flow, you definitely only need to check the charts every 4 hours for like 3 minutes, which is very, very good. And by the way, scanning the watch list takes about 15 minutes. So we're speaking about 15 minutes to find the direction of the pairs and 3 minutes every 4 hours to actually find executions. So let's now make a full breakdown of the situation that we currently have on USD CAD, because definitely it is an interesting pair that has the possibility to provide to us a good opportunity. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. So let's start our analysis on the monthly time frame. Now on the monthly, what we can clearly see, we can see that the market has created this nice impulse to the upside, followed by this retracement. Now, after an impulse, if you want to measure the correction, what do you have to do? You have to take your Fibonacci from the low to the high of the impulse. And by taking the Fibonacci from the low to the high, you can see that the market just hit the 0.786 of the Fibonacci taken on the impulse. Now, it's very important that the market hit exactly the 0.786 because it was the level at which we actually expected the market to go. And why is that? Because the 0.786 was the Fibonacci level aligning the best with structure. And when I mean aligning the best with structure, I mean aligning the best with this previous resistance here, which is now turned support at this area. So we definitely expected the market to reach this area because most of the times the market will retrace to the Fibonacci level that is aligning the best with structure, which in this case was exactly the 0.786. Going down on the weekly time frame, what do we have? Now on the weekly situation is extremely interesting as well because first of all, we can clearly see that also from a weekly perspective, this zone is extremely strong. In fact, it was acting as very strong resistance here. So resistance, 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 and again resistance. And all this resistance is now turned support at this area. And not only this, the market actually approached this level, also showing a nice bullish pattern. In fact, the market in approaching this support has created this M formation. So we have an M formation testing very strong monthly and weekly support. Now in general, after an M formation, what do you expect? You expect the market to make a move to the upside to go and test the neckline of the formation, aka the previous support, now turned resistance. So from here, definitely we expect the market to give us a move to the upside to go and test this previous support, now to resistance. The only negative confluence factor that we have up to now is that this weekly candle has this shape. Now, when you have a candle like this, you actually expect the next candle to fill in this wick. That is something that the market does over and over again. So the only negative confluence is the fact that the market might actually melt a little bit to fill in this wick before actually starting the move to the upside as we want to see. Going down on the daily, what do we have? Now on the daily time frame, situation is extremely clear. In fact, what did the market do? First of all, the market was finding support at this area and we definitely wanted to see the move to the upside already at the time. However, why it was impossible for us to take a long on USD CAD? Because as we said earlier, monthly, weekly, and daily are for direction. And from a directional perspective, we wanted to see the move to the upside. However, on the 4 hours, it was pretty clear that everything was bearish. The market was just creating lower lows, lower highs, failing to break structure to the upside. So it was impossible for us to take a long on USD CAD. And that is why many people that are not doing this, they're just executing trades based only on direction, they actually fell for the trap. They probably took the long and probably their stop loss was below these areas here. And that is exactly where the market went. The market went to hunt all those stop losses so that institutions could start longing USD CAD and created the break back to the upside. So this is a clear stop hunt for USD CAD. Now let's see if institutions actually bought from this level. Let's go and check this COT data. This is the commitment of traders, so basically how the biggest banks and institutions are positioned in the market. And what we can see if we check the data for the CAD. Now, first of all, if you check the data for the CAD, you're actually checking CAD USD because all currencies on the spot are traded against the USD. So if you check the CAD, you're already checking CAD USD. But if you want information on USD CAD, you basically have to reverse everything. And what you can see that with the last report, we went from minus 12K to minus 23K net positions. So we basically see that institutions closed 12K longs on CAD USD. What does it mean? If they close 12K longs on CAD USD, it means that they closed 12K shorts on USD CAD, because as we said, we have to reverse everything. And if you are closing a short, what you're actually doing, if you're closing a short, you're actually buying. That is basically the thing. For every buyer in the market, there has to be a seller. For every seller, there has to be a buyer. So if you're closing a short, you're actually longing. So they used all the liquidity of the stop losses that were here to actually start buying a USD CAD. And in fact, we can see net positions decreasing again. And the market broke back above the daily structure, which brings a very cool and very nice opportunity, because we have the possibility to see the market go and retest one last time this level. Now, as we said, there is only one negative confluence factor up to now, which is that weekly candle. So we must be aware of it, but it's not a problem because, as we said many times, trading is reactive, not predictive. When the market will actually manage, and if it will manage to go and test again this structure inside of this area, this is where with students, we will be waiting for proper confirmations. So on the 4-hour time frame, so every 4 hours, we will be checking for possible confirmations. So one of our valid entries. So with students on the 4 hours inside of this area, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good probability at that point and very good opportunities for the move to the upside to go and test this previous support, now turned resistance. And obviously the risk to reward to the upside will be very good, minimum 1 to 3. But it's very important that when the market will reach this area, it will show us proper bullish price action inside of here. Otherwise, the market will break this area to the downside and go and fill in the wick of the weekly candle that we have just spoken about. That is why trading is reactive and not predictive. But inside of this area, this is the best zone to be looking for a potential longing opportunity on USD CAD. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day, including the weekends. So I really suggest you go and check it out, and I will see you in